Hello and welcome to another Smaulgld live stream tonight is October 1st, 2018. Tonight's topic is a follow-up from the last two nights when we talked about does the COMEX have enough silver to avoid a default, and then does COMEX have enough gold to avoid a COMEX default. Tonight we're going to conclude with the COMEX default story. And we're going to build off of what we talked about the last two nights, and we'll do a little recap, and then we're going to explain why this whole COMEX default story that's been lingering for 15 years, people constantly predicting imminent COMEX default, and then gold and silver set to skyrocket, is pretty much a farce. But first, let's take a look at our gold and silver prices and what happened during the day. Gold, pretty much flat. Excuse me. Gold opened around 1188, closed around 1189. Didn't really move much today with any type of conviction. Silver actually lost a little bit, opened up pretty high. It had a strong Friday, and didn't manage to hold on to its gains and closed slightly down. It's about 1448. Stock markets, however, at least the Dow Jones, up to 26,651. They attribute that to the announcement by the Trump administration of reaching a deal with Mexico and Canada and having, in a sense, a new NAFTA deal, which again I think will be put up to be approved later in the year in Congress. On the crypto side, we have Bitcoin just hanging in at 65.58, pretty much unchanged. Bitcoin Cash, same thing, 530. Ethereum, same thing, 229, all within a percentage point or so over the last 24 hours. Litecoin got a little bit down further. It was below 60. Currently, it's at 60.14, down about 2.5%, and Ethereum Classic 1118. Over to the U.S. Mint. The strong silver sales, Silver Eagle sales that we saw at the end of August, resulting in about 1.5 million Silver Eagles being sold, mostly in the last week of August. And then the early September sales, which actually caused the Mint to run out and have to suspend sales to authorized purchasers for about 2 weeks. And yet the American Silver Eagle sales for September came in at 2.897 million. That is the largest September sale since September. And you have to go back all the way to 2016 to find a month other than a January bigger than that. So very, very big month. I'm going to do a follow-up on American Silver Eagles probably tomorrow, just because today the American Silver Eagle sales were 350,000 to open up the month. Now the gold sales at the U.S. Mint, they only had what was it, about 1,500. They didn't sell much the first day, but the silver sales are definitely picking up. We saw strong silver sales or silver imports into India and gold as well. So physical metal is in demand again, and we really haven't had any reason for that other than low prices. It's not like we haven't had essentially the same economic environment. Nothing has really changed. There's no imminent default. There's always something, but I mean I think it's just the low prices that are driving this. And of course, you can get a spark if anything happens. I just put up 3 links. Those are affiliate links. They are for SD Bullion. I think we're having a Silver Eagle special today. I'm not sure it's just today only. I think it's only 2.25 over spot, which is a good deal. Money Metals Exchange and Golden Eagle coins. If you buy from those links, it's not investment advice. I'm not telling you to go and do that. Only if you're going to buy anyway. If you click on those links, you go to those sites. It'd be no different than if you went to the sites directly. But if you do buy, Smaulgld makes a small commission. So it does help the site out that way for those of you who like to help out the site and are also looking to add to your positions. Again, I'm not telling you, it's not investment advice to do it, but if you're going to do it anyway, you've made your decision, check out those links, have at it. All right, so let's take a look at this COMEX story. This is a story that has been told over a decade, and people believe it, and they tend to blend their... They get the idea in their head that COMEX is evil, the banks are evil, and therefore COMEX is going to default. It's almost like a wishful thinking type of thing, and you hear commentators present it with such conviction, COMEX default, inevitable. There's actually, I'll send at the end of this video, I'll give you a link. Someone did a video 4 years ago that documented at least 40 or 50 COMEX default predictions, and they go through them in about 4 minutes. They still continue to promote this COMEX default. They bring out and they act like they're experts. They're showing you documents and commitment of traders, and they're run out of... I'm going to give you 4 reasons in increasing importance why COMEX won't default. Now, the last 2 nights we went through, and we're going to go through them again. First of all, there's more gold and silver at the COMEX than is required to even come close to meeting anyone looking to meet delivery requirements. But I'll give you the 4. These are an increasing importance, and we've only gone through the first 2. The first is COMEX is not a place largely where traders go to buy gold and silver. It is a paper market. They are there to trade contracts. You've seen how you have 20 or so commercial traders, non-commercial traders, each on each side. For the most part, they're there to take a long position or take a short position, and then to sell down their long position, and then decrease their short position. And they like to trade the volatility up and down and up and down. They could care less about silver. They don't know anything about silver eagles, stacks, poured silver. They're not even interested in that. They might as well be trading beanie babies. They're looking at charts. They're looking what their other side of the trade is doing. For the most part, they're there to trade, not fundamentals, but they're there to trade. And they know it's a paper market. They're not there to buy gold or silver. Everyone thinks, what if they all stood for delivery? Well, that's like saying, what if all the vegans went into a steakhouse and ordered steak? It doesn't make any sense. That's not why they're there. They're not there to buy gold and silver. They're there to trade their positions. People who want to buy gold and silver generally go and buy gold and silver. That doesn't mean that they don't deliver decent amounts of gold and silver, but that's not the primary purpose of trading on the COMEX. So that's number 1. COMEX is not a place to buy gold or silver. We're going to go through some charts to show you. The second is, because they're traders, they understand fully that their trade may not necessarily be backed ounce for silver, and they don't care. It doesn't stop them from trading. And you say, well, they're crazy, and if they ever found out, they know it already. Does it stop anyone from using a bank knowing that they don't have all the dollars in the bank to back it up? I'm not advocating this is a good thing. I'm explaining to you why. This is not a big deal for most people. Most people that trade, or everyone who probably trades on the COMEX, knows that there's not an ounce for their trade. And most people who use the banking system know that as well. Now, some people may not know it. Some people may be hoodwinked into thinking when you go there, I mean, when you bring a kid to the bank and they put in $10, they may think they're putting in $10. It's called a deposit. The bank is holding on to those $10 for when the kid wants to come back, and maybe they'll even give him $10.06 in 3 years because of interest. But the majority of adults know and accept fractional reserve. The society accepts fractional reserve just about everything. The only people who don't accept it are people like us who are hard money advocates. The world does not think that way. The world is on credit. And so COMEX is not a place where they're going to buy gold or silver. They're going there to make fiat profits. And number 2, they know it's fractional reserve. It's not like the cat's going to be out of the bag and they're going to figure it out and say, oh, I'm standing for delivery. 3, You don't beat the casino at the casino. We're going to explain that when we get to that one. You don't walk into COMEX with the idea you're going to crush the casino. You're going to cause a default because you're going to stand for delivery. Or you and your buddies are all going to go in there and stand for delivery. First of all, you're going to lose your money. There's no point in standing for delivery for something that doesn't exist. If you think that's where you're going to be, you're going to... And two, once they see you coming and they know what you're trying to do, they will shut you down. 4, the COMEX is a U.S. government-protected exchange. All right, let's go back now to what we were talking about last night with COMEX and why you're not going to have the big COMEX default. I'm going to start showing you those charts again, but I'm going to show them to you in a different way, and also for people who didn't join us the last 2 nights, it'll be a nice review. And for those who've seen it before, I'll try to make it a little more interesting than I did last night and the night before. Okay, so first of all, I'm going to give you the why COMEX is going to default argument, and then you get all excited, and then you insist it's going to happen, and then you run out and you buy gold and silver because it's set to skyrocket once everyone realizes there's nothing left. So let's start with let's see, we'll start with gold. All right, so a lot of people like the owners per ounce. So let's start with gold owners per ounce. I'm going to show you that chart. And what this chart reflects is the idea that currently there's 315 owners per ounce. That's outrageous. It's going to collapse. What if they just stood for delivery? Then the COMEX would collapse and the fraud would be exposed, and then gold and silver would be set to skyrocket. Well, first of all, as we explained last night, it's not really 315 to 1. Second of all, COMEX is not the only place in the world where there's gold. As we mentioned last night, and we're going to see in a second, the amount of gold held in the COMEX default, I love saying that all the time, in the COMEX vaults is about, I think we said 9 million ounces, 270 tons. So if COMEX runs out of gold, that doesn't mean there's not gold elsewhere in the world, and that it automatically means gold shortage, there's no gold left, people are going to go nuts, and the price is going to go skyrocketing. No. But let's go back to this 315 owners per ounce. The way they get that number, and it's not really owners, it's more or less claims. What they're saying is, if you look at the top box, you got the gold price on the top box, okay? And then you have the second box, which is the total number of ounces that are under contract, represented by those 100-ounce contracts based on the 100-ounce bars, good delivery bars, 995, or the kilo bars. Those are the only ones that can be traded. They're either eligible, meaning they're in that form, or registered, which means they're set to go. The third box shows the 146,000 ounces that are registered. And you say, wow, 46 million ounces of gold contracts being traded, and there's only 146,000 ounces. My goodness, it's set to collapse. COMEX default. Now again, you go back, and I'll give you a link to an article tomorrow that I've done, and also which includes the thousands of times that people have predicted the COMEX default based on this type of data. All right, so you see what you got there. Now it looks pretty ominous. You got 315 owners per ounce. These people must be nuts to trade there. It's only a matter of time until it collapses. Well, look what it once was before. It was almost 600. In the bottom box, you can see in 2016, and boy, were the stories about COMEX default going nuts back then. And then it went all the way back down. You can see it dropped dramatically. And now it's back up, so the stories are probably going to come out soon if they're not already out there already. Or they're talking about JP Morgan's going long, silver set to skyrocket. And you have to ask yourself, 8 years of this nonsense. Silver set to skyrocket because of COMEX, because of JP Morgan, commitment of traders, historic this, never happened before. And then you have to ask yourself, why doesn't it happen? Oh, manipulation. Okay, fine. But you can't keep saying the same thing for 8 years and then point to manipulation, because that means your analysis is faulty, if only for one reason. You don't know about the manipulation? Of course you do. But it's not just manipulation. It's actually how the COMEX works, is a form, you would say, of manipulation, and the fact that you can trade and not have everybody have an ounce for each contract back, but it doesn't represent that that's what it is. It's talking about exposure to price, and it has a delivery option. And in fact, when we get to silver, the silver contract, the mini contract, has no such delivery requirement. When you trade the 1,000 ounce contract, what's called the mini, there's no delivery option at all. It's a paper, it's a derivative, that's all it's meant to be. It's not meant to be, it's not like if you ordered from SD Bullion, and let's say 10 of you click on those links, and you all buy 10 ounces, and that's 100 ounces of silver that you all order from SD Bullion. And SD Bullion only has 10 ounces. So they figure, okay, we'll take your money and maybe we'll give everybody an ounce, and then we'll tell you, the rest of you, you'll get your 9 ounces maybe whenever. That's not how it works. Bullion dealers have to have the bullion, other than the unscrupulous ones that have been out of business. But when you order from a reputable bullion dealer, they'll either tell you they have 10 ounces to sell you, or if they're sold out, they won't sell it to you, or they'll tell you it's on order and it's a pre-order. But that's not what COMEX is. You're not there to buy or sell silver, so it's not like they're expecting to get silver. So anyway, that 315 number looks really, really bad. But then let's go through that number and see why it's really not that bad. But I'll show you what's behind that number. So if you look at the registered gold, this is the worst chart you're going to see all night. This does look bad, and I don't like this myself either. But okay, so this chart is going to show you that we are at near record low levels of registered gold in the COMEX. And you say, how does anyone in their right mind trade on this basis? Look, there's 100, it says 0.15, but it's actually, that would be 150,000 ounces. There's actually 146,000 ounces of gold in the COMEX. And all it would take is someone to stand for delivery, and then it's lights out COMEX and it's off to the races. No. If people are there to trade and they want gold, well, if they cash settle them. And people make it sound like that's evil. Okay, so let's say somebody wants gold, and a couple of traders, few traders want gold, and there's 150,000 ounces there, and they requested in, let's say it's 200,000 ounces. What either will happen is someone who has eligible gold will register it and sell it to them, or they will pay you the price in fiat currency. And if you really want to have the gold instead of the fiat profit, what do you think you're going to do with the cash? You're going to go buy gold. Yeah, but there won't be any. No, wrong goes star. There's not any registered for sale at the COMEX, but there's plenty of gold in the world that you can buy, and that's what people probably do when they get settled in fiat, if they're indeed not what people willing to register and sell them the gold from the COMEX. It's not like the only gold that anyone could ever buy is at the COMEX, or the only silver. So if anyone is ever short on a contract, when I mean short, that they're unable to take delivery, they can just take the cash and then go buy the gold or silver somewhere else. I think it's a mistake people make, is that somehow all the gold is here and they're running out, and then if they're run out, then it's game over and you can never get gold again, and that's why you should buy now, today, before this all happens. All right, but it's really not even as bad as that. That's the extreme case there that I'm showing you. But as I mentioned, there's other gold at the COMEX that's in that 100-ounce eligible form, that's in the form that can be delivered. It just hasn't been registered for sale, but it easily can be traded as such. And here's the chart showing you. So you saw only 146,000 ounces were registered, but there's 8.82 million ounces in eligible form to be registered if people want to. They just haven't registered it. The gold that's eligible doesn't have to undergo anything. It's already been assayed, meaning that they know that it's 995 gold. They know it's in the 100-ounce or kilobar form. So it's not like there's any bottleneck. All they have to do is register it, and boom, out the door it goes if somebody wants it. So it's a big, it looks dramatic when you see 146,000 ounces. But there's 8.82 million ounces there. And most of the reason that gold has been put in eligible form is it's there to be traded at some point. The people who own it, remember, they're not stackers, and it's not like they're stacking it home for the apocalypse or for prepping. It's there eventually to cash in fiat. That's the reason it's there. Or maybe they want to cash it in, maybe they want to take it home. But the point is, when you use the COMEX eligible vaults that are part of the system, it's because you want to trade it easily and you want it in that form. Now you can hold monster boxes and other bars at Brinks and so on, but that you can't trade on the COMEX. What I'm showing you here, these 8.82 million ounces are is the gold that's in the form eligible to be registered and then traded pursuant to one of those COMEX contracts. So then when you combine the eligible and the registered, you get a chart that looks like this. These are all from Nick Laird. Gold Charts Are Us does a tremendous job of producing these charts. And so now I'm stacking together the registered and the eligible, and you can see they're almost the same because very little of the COMEX gold has been registered lately. But the amount of gold in the COMEX vaults has not really declined much at all. It's actually up since 2013, 14, and 16. It's down since 2017. But for the most part, you can see there's close to 9 million ounces of gold. And again, that's not all the gold in the world. That's not all the gold that's eligible to be bought or sold in the world. It's just what COMEX has on hand, and there's a lot of gold there. So now remember that 315 number of the registered gold. Well, let's take a look now at owners per ounce. When you include all of the gold, the total gold stocks, well, now you get something that's a lot more reasonable. Owners per ounce or claims per ounce drops dramatically down to 5 to 1. Again, top line, price of gold. Second box, how many contracts are outstanding? What's the value of those contracts? All the way to the right, 46 million. Go to the next box, down, third box. There's about 8.95 million ounces in the COMEX vault in the form eligible to trade. Drop down to the final box, fourth box, go to the right, owners per ounce, 5.13. That's a lot. That's really, considering how many of the contracts actually do, quote, stand for delivery. 2 or 3 times the amount of contracts could stand for delivery, not even make a dent in the amount of, and not draw down those 9 million ounces. So if you look at it that way, it's not even a threat. Again, because you got to remember rule number or reason number 1, it's a paper market. They're not there to buy gold and silver anyway, for the most part. Secondly, when you look at this, we just gone through the gold. There's enough gold there anyway. Not for everybody, but remember, everybody isn't there to buy gold and silver. It's not, again, I'll use the example. It's not like everybody places their order tonight to SD Bullion or Money Metals Exchange or Golden Eagle Coins, and all of them say they have 100 ounces of gold, and they don't. But people order it anyway, expecting to take delivery, and then you get a letter from them saying, thank you for your order. We took your money, but guess what? We're not sending you the gold. We don't have that much gold. Joke's on you. Well, that would be fraud. Now, a lot of you say, well, that's what COMEX is. No, it's not. COMEX is not telling you we are selling you gold that we don't have. It's a big difference between a bullion dealer saying, why don't you send me money and I'll sell you gold that I don't have. So when you send in for your 10 ounces of silver and they send you an ounce back and say, we don't have 10 ounces of silver. We only got 1. So you should be happy you got that. That's fraud. They're not going to do. They don't do that. Only a fraudulent dealer would do that. COMEX is not a bullion dealer. That's what people have to get through their heads. They're not there to sell you gold. They're there as a trading platform. It's very important. It's a trading platform. And again, you may not like that. Then don't trade there. What I don't like about it, this is the main reason I don't like it. It's got nothing to, I have no problem with the way they operate. The problem I have with the way they operate is they set the price. I don't mind options and futures and all that nonsense. Except these options and futures set the price. And they shouldn't set the price. That's the big thing, because it's not supply and demand. This market should basically just reflect the physical buying and selling, and then them trading what they think the physical buying and selling is doing for the price. In other words, they would be betting on how the physical market was operating. Instead, they are the market. That's the problem I have with COMEX. Totally different. I have no trouble with people doing derivatives and futures and options, but I don't like the fact that they set the price. So it's a big, big difference. But again, they are not a bullion dealer. So they're not committing fraud by not having enough gold or silver on hand. That's not what the purpose of the COMEX is. Now let's just take a quick look now. The same thing. Oh, yeah, let me just show you the total. This is the total gold. It's not in one way or other separated by eligible or registered, but you can see there's 9 million ounces. And then let's move over to silver very quickly. It's the same exact concept in silver. However, silver is not a problem at all, and I'll show you why. Open interest is very high in silver lately, but so are the amounts of silver that have been dumped into the COMEX vaults. Let's do what we just did for gold. Let's look at the registered silver. Remember, the registered silver is the silver that you're going to be able to buy. Okay, not buy. Take delivery on, not buy. Well, if you're worried about it in 2016 when it was down to 20 million ounces, if you're worried about it in 2011 when it was down to 30 million ounces, right now it's at 72 million ounces. It had been as high as 90 million ounces a couple of weeks ago. Plenty of silver there to handle the people who may wish to take delivery on their contracts. But let's just take a look. Now, so that is the registered silver. You can see a lot of silver. And if you take the registered silver and we do exactly the same exercise we did for the gold, just make sure you're there with your chart. When that comes up, I can start. So what we're going to do is look at the same chart. There it is. Top box, silver price. You can see it's basically flat in the 20s, lower 20s, upper teens. Second box shows, and you can see that line moving up, those 5,000 ounce contracts. Those there's actually $1 billion worth of silver being traded. Now this does not include the mini contract. This does not include the mini. Spent a lot of time in Latin America and Spain. This does not include the mini contracts, the 1,000 ounce contract, for which there's no delivery anyway, so there would be no reason to include those. Go down to the third box. You can see, when we saw this already, there's 72.4 million ounces of silver registered in those 1,000 ounce bars, 999 fine silver. And then you go down to the fourth box to the right, you see owners per ounce 14. You might be alarmed by that, you might not be. I'm not alarmed by it, knowing the history that they don't take delivery. Okay, so now let's look at what other silver might happen to be in COMEX. Well, we're going to have to add in, that was the registered silver. Let's look at how much eligible silver is. This is silver they just haven't bothered to register, but it's in the COMEX vaults. It's in the form. It's in those. It's in the form of those 1,000 ounce bars, and it's 999. And there's 217 million ounces. Okay, so there's a lot of silver in the eligible form. Now let's just take a look now. If you add up the eligible and the registered silver, you're going to get a total number that look like this. Spent a lot of time in Italy too. It look like this. So this one, if you look carefully, is 289 million ounces. Okay, you have 289 million ounces, as Mario Draghi might tell you. That's a lot of silver. Okay, that's a lot of silver. And again, they're not saying we're selling you silver. People keep saying it's a fraud. It's not a fraud. The fraud is the trading on the COMEX. repeat, the fraud is not having a one-to-one correspondence. The fraud is allowing naked shorts. And then I would say the secondary fraud is that it controls the price. The idea that there's not a one-to-one silver, that doesn't bother me. What bothers me is that they allow manipulative practices to take place, or it's seemingly manipulative, where people are dumping contracts on the market that don't make any sense, and they don't look into it. They have position limits. They don't allow that. The other thing I don't like is when the price starts going up, they slam it down, either because they put the limit on how high it can go or low it can go. I don't like it. Or they play games with your margin, how much you have to have. That's the part that bothers me. The fact that there's not a one-to-one correspondence to me is not that troubling, because that's not why they're there. It would bother me, again, is if a bullion dealer did that. If a bullion dealer tried to sell you something they didn't have. I think there was a bullion dealer that was doing that. They would take orders. They would hold on to your money. Then they wouldn't send it to you for a month or two. So they'd eat the float. They'd hold on to the float. And then they eventually would send you your gold or your silver. Or they would send, if they had 100 customers, they'd send 80 people half of their order. Then the next month, they'd send 70 people the other half. And, they'd always have, that's fraud. Because they're claiming to sell you silver or gold that they don't have. This is not the same thing. Okay, so this now is your total silver that's in the vault, 289 million. Again, one of the largest silver stockpiles around. And remember, it's a bunch of vaults. It's not just, there isn't a thing called the COMEX vault. It's JP Morgan, Seeing Things. It's Scotia Makata. It's Brinks. It's a bunch of different vaults. But that's the aggregate. And then if you look at the eligible and registered put together, chart looks something like this. And you see 289 million ounces broken down into eligible stocks and registered stocks. Both numbers very robust. And yeah, you can see that chart there. Let's move on to what that looks like if you take the total silver and you say to yourself, how many owners per ounce is that? Well, now you're getting darn near close to 1-to-1. It's 3.5 to 1. You could see, we'll go through it. Top box, price of silver. Second box, number of 5,000 ounce contracts equals 1,000,000,016 ounces. Third box, you could see there's 289 million ounces of silver in the vaults, and that would come down to, you divide the billion ounces by the 289 million ounces, and you get 3.5 to 1. Again, nothing outrageous, nothing to cause alarm for. Plenty of silver if a trader wishes to take delivery. And again, most of them don't. If they do want to take delivery, it's there. If they want to take delivery, for some reason, so many people stepped up to the plate and took delivery, they can always settle them with cash. And again, it's not like they wouldn't be able to take the cash and find silver somewhere else, because there is plenty of silver elsewhere. There's plenty of gold elsewhere. The COMEX is not the only place in the world where the majority of the gold and silver stay. Okay, so we've kind of covered that part. If you were with us last night and the night before, we did that exercise already. Let's go into the more important reasons. So we've already covered that it's a paper market. They're not selling gold. They're not selling silver. They don't represent that they're selling gold or silver. They are there as a trading platform, and it attracts traders, not buyers or stackers of gold and silver. The issues, again, that I have with COMEX is not that they don't have as one-to-one correspondence, is that they allow that type of naked shorting, and that it actually controls the price of gold and silver, which I don't see why it should, but it does. But that leads us to points 3 and 4. This is all by design, but this is also why the COMEX is not going to default. First of all, there's enough gold and silver there. Second of all, they just pay. Now, you may call the fact that they cash settle a default but it's of no importance whatsoever. It means nothing. You see, again, if you sent money to a bullion dealer and they didn't send you the money, didn't send you the gold or silver, that is a big deal. That is fraud. But it's not for COMEX. It's a trading platform. It's not a bullion dealer. That's the most important takeaway you need to take away from this. They're not there to sell you gold and silver. They're there to facilitate trading. Again, the problem with the facilitation of trading is it shouldn't set the price, but it does. And they shouldn't allow naked shorts, but they do. That's the problem I have with COMEX. Not that they don't sell, they don't have as much silver and gold to sell to everyone who might want to take delivery. They don't want to take delivery. I'm going to keep repeating that, but we're going to get in now. So we've done number 1, we've done number 2. Your bank is the same situation. And you can argue your banks are fraudulent too. Fractional reserve is fraudulent. The difference is, though, I think the bank, if you don't like fractional reserve, the bank is far more fraudulent because the traders know when they trade on COMEX what's going on. They're not there to buy gold and silver. But the person who puts money in the bank, they may know, but it's fraudulent. They may know when they give the money to the bank that might not be backed one-to-one. That's frightening and terrifying if that's your savings. These are big boys. These are big boys and girls trading on COMEX. They know the score. And again, if they want to buy gold and silver, they can go buy gold and silver. There's no place you can go to store your money, though. The bank is the place to store your money. And you would hope if it's your savings that they'd have to hold on to your savings. They don't. All right, now, these are the last two are more important. You don't beat the casino at the casino. Commodities exchanges like the COMEX and like casinos, they have rules in place to make sure they remain profitable and that they stay in business. So, let's say traders on the COMEX get nervous. There's not much gold and silver there. First of all, they're not going to get nervous. It doesn't matter to them. They know they're going to get paid. They're either going to, if they want delivery, they're going to take delivery. There's probably people right now that have cashed out contracts well in excess of the value of 150,000 ounces of gold. They didn't want the gold. They got cash settled because that's what they wanted. But let's say someone wanted to take a move on the COMEX, and they saw it coming. First of all, they have rules on position limits. Now, they don't enforce them, it seems, when they don't care. But if they saw a position being set up and they saw that it was standing for delivery and it wasn't there, and they knew that it was done for for ill intent, they would shut that trader down. Because if they knew that the trader was solely standing for delivery for purposes of busting the COMEX, which first of all they can't do. All they can do is bust out the registered amount. That would have to be an example. They couldn't do it today because there's 9 million ounces there. But let's say for whatever reason that the COMEX went down to like 2 million ounces, 1 million ounces, and only 100,000 were registered. You might have a possibility there, and that would be ill-advisable for COMEX to be in that position. But even if you were in a position where a trader could say, okay, I'm going to make my move now. I'm going to stand for delivery. I know they don't have much registered or even eligible gold, and I'm going to stick to my guns, and I'm going to shut this place down. It's not going to happen. First of all, if you tried to stand for delivery for something that's not there, well, then you're a moron because you're not going to get paid. If they don't have it, you don't get it. Second of all, if they know that that's what you're going to try to do, they won't even cash settle you. If they think that you're there to try to like destroy the casino, they're going to shut you down. They're not going to allow you to trade with ill intent. Now, what most people don't know, there's a thing called CME Rule 413. This isn't just me imagining what they might do. The CME group owns and operates COMEX. Rule 14, and I'm going to read it to you. The chief regulatory officer or his delegate, upon a good faith determination, which means because he says so, that there are substantial reasons to believe that such immediate action is necessary to protect the best interests of the exchange, he or she may order that any party may be denied access to any and all CME group markets. That means you try to stand for delivery with the sole purpose of shutting it down, exposing it, whatever it is. Guess what happens to you? Just like in the casino, you go in there, you start counting cards, you figure out how to make money, you get a tap on the shoulder, you drag in the back room. If they're nice to you, they'll throw you out of the casino and tell you never to come back, or they may cattle prod you in the back. Well, the chief regulatory officer has, if they have reasons to believe on good faith that they need to immediately act, they can toss anyone at any time off the platform. Not only can they toss that trader off the gold or silver platform, they can toss him off all. So for example, let's say it's ABC Bullion, whatever it is, or any type of bank, any type of big trader. And they're not just trading gold and silver, but they have ill intent in the gold or silver market. They'll shut them down across the board. That would be catastrophic for a trader to have them denied access. Why would they do that? Why would they risk being thrown because they want to prove a point to make gold and silver skyrocket? It's just foolishness because they're not going to get away with it, and it wouldn't make any sense. All that would happen is they'd lose their trading privileges, which, by the way, are worth a lot more. Remember, even if you bust the COMEX, that's not going to change the supply-demand dynamic of gold and silver. What it might do is wrest pricing from them, but they're not going to let it happen. So, 1, any party may be denied access to any and all CME group markets. Now that is, they can do it immediate. 2, any party may be denied access to the Globex platform. 3, any party may be denied access to any other electronic or clearing platform owned or controlled by the CME group. Well, CME group also has Bitcoin trading. They'll toss you off for that. 4, any member may be immediately removed from any trading floor owned or controlled by the CME group. So, they shut you out and they toss you out. What is the point? Who is going to do that? They know going in what the rules are. They know they're not there to buy gold or silver. They know it's an accommodation that they can take delivery. Most of them don't want delivery. But currently, there's enough gold or silver on hand to satisfy those. So, COMEX is prepared to shut down any trader or group of traders, irrespective of their motive, if they engage in trades or series of trades that might not be in the best interest of the COMEX. So this nonsense, someone's going to stand for delivery. It's not going to do anyone any good. I know I heard an interview with someone who was a big trader. They said, why don't you do it? Why don't you expose the COMEX? He says, because I don't want to lose. I have nothing to gain. All that's going to happen is they're going to shut me out of my position. Now it gets worse. Under that rule, I think it's 413. Yeah. Not only did they deny you access to the platform, it can be denied for up to 60 days. You can go bankrupt in 60 days trying to prove, oh, I didn't mean it. I wasn't really trying to screw up yeah. It's up to the chief regulatory officer to make that determination, and his access can be denied for a period not to exceed 60 days. So they can toss you and not let you back. And it's such a disincentive. And there's no reason anyone in their right mind would even want to try to do something like that, because you're not going to make any money. And if your trade doesn't go through, you haven't even accomplished your goal of harming the COMEX. 4, COMEX is a U.S. government-protected exchange. Now, the reason I say that is it's not going to be game over for COMEX when someone stands for delivery. You've all heard of a thing, or maybe you haven't, of the President's Working Group on Financial Markets. There's a thing called the Plunge Protection Team. Now, after the stock market crash in 1987, Reagan signed an executive order. This is just interference in the markets, free trading Ronald Reagan, where he established that working group of the Plunge Protection Team. The task of the group is to enhance the integrity, efficiency, orderliness, and competitiveness of our financial markets and to maintain investor confidence. Sounds like a lot of bureaucratic psychobabble. Now, the working group. Guess who's in the working group of the plunge protection team, or the president's group on whatever they call it, president's group on financial, working group on financial markets. Here's who's in that group. And remember what the group is tasked to do. They're there to enhance the integrity, efficiency, orderliness, and competitiveness of our nation's financial markets. Basically saying the government controls our financial markets. Repeat, the government controls our financial markets. The working group, the plunge protection team, is there to control the orderliness and the competitiveness of our nation's financial markets. Who is on the PPT? The Secretary of Treasury. Makes sense? The chairman of the Board of Governors of the famous Federal Reserve System. So now you got Munchkin and Jerome Powell. The chairman of the SEC. I don't know why that person's involved. I guess because they're regulating. The next one, the chairman of the Commodities Futures Trading Commission, the CFTC, which oversees the CME Group and all of those futures. Now here's the best one. Not only does the CME Group itself have the broad discretion to go in and shut anyone down who's trying to screw up the COMEX by standing for delivery, whatever the nonsense you hear some pumper tell you they're going to do. The PPT working group, which includes the chairman of the CFTC, has broad discretion to intervene in markets. Broad discretion to intervene in markets. That means they can go in and pull the guy out by his hair and throw him to the curb if he's standing for delivery or doing some other nonsense. Or if it's China doing it. Okay. And shall consult as appropriate with the representatives of various exchanges, meaning the CFTC guy will go talk to the CME guy to determine private sector solutions wherever possible. So, if somehow the CME group hasn't managed to toss off a trader, punish a trader, suspend a trader in time not to cause the damage, well, then the government can come in and say, you know, the private sector didn't work here. We're going to order that trade or whatever that person wanted to do, we're just going to unwind that trade. Don't think they can't do that? They printed $4 trillion. They easily can unwind the trade by order of the PPT. So, not only is it not even close to happening, they have rules in place at the exchange and at the government level to not allow the COMEX to go out of business. Repeat, it says, the purpose of the plunge protection team is to enhance the integrity, efficiency, and orderliness and competitiveness of our nation's financial markets and maintain investor confidence, which means they are protecting the CME group. They're protecting COMEX. You do not want to go in and mess with the CME group. They will mess with you first. The casino will throw you out. And if that doesn't work, they bring in the Las Vegas police, and if that doesn't work, they bring in the National Guard. If that doesn't work, they bring in the military. You're not going to get away with standing for delivery, any of the cockamamie idea that you may have to screw up the COMEX. You won't even get close to it. First of all, it's not even close to happening, but if someone wanted to try it, it's not going to happen. They're not going to allow the COMEX, a very important part of our nation's financial markets, to go out of business because China is standing for delivery or some rogue group of traders are doing something. Those people, you could just imagine what happened. Not only would they get tossed in jail, they're thrown out, they'd be audited by the IRS, they'd be fined, arrested, probably charged as a terrorist. It's not going to happen. Only way the COMEX goes under is if the entire United States goes under. That is a protected exchange. It is deemed necessary, important to the financial and probably military security of the United States. Those markets are protected. In fact, if you read, CIA and spy stuff, they always talk about the Russians during the Cold War trying to bring the markets down. Those are assets of the United States. The dollar is the #1 asset. The stock market and futures markets are the #2 assets. They are protected. You may not like that, but they are not free markets. They are controlled markets. They are regulated markets, and you just don't go in there and mess them up. All right, let's take a look at our comments tonight. Shark Air, he's giving us a little Dusty Springfield. I don't know why. You got in the cool of the evening when everything is getting kind of groovy. Bogus Fiat is here, and Carl Joseph DiMarco here again. Welcome to WrestleMania, says Luke Granger. Toronto, Pablo Pina. Hola, hola from Toronto. Bogus Fiat, Golden Week holiday this week in China. And there's your, all right. Now what happened here? Oh, there they are. Okay. Let's see. Oh, I'm still with you. I got so many comments that they're rolling. I'm trying to get to the last one here. All right. Oh my goodness. So many comments. There's game over and game changer. I hope I'm not missing any here. This is a horrible interface that they have here. So many comments. All right. Metals rise after that. Mate, banks create new money supply when they make a loan on the counterfeited, create a thin air. Banks are evil. Okay. I'm not going to argue about banks. Force majeure is not used only. Repeal 16. BS, you can legally demand and get delivery unless they declare force majeure. Okay. So they find the gold for you. It's not the end of the world. It's not like the COMEX is finished. It's not like there's not enough gold to settle a trade. All right. Most people would be satisfied to take the money because that's why they're probably trading. Again, if anyone really, 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 really wants gold, they can go out and they can buy it. Okay, I figured out how to work this now. Mint Mark, enjoy your channel. What is your opinion on the future of the Chinese market, short-term and long-term? Only thing I can say about the Chinese markets is, and it's a point that most people miss entirely, and Carl Joseph DeMarco knows this. China is a credit-driven debt monster. They know it. The whole world knows it. The only people who don't know it are people that like gold. They think that China is only about gold and that it's some type of sound money paradise. It is the king of debt. So if you believe that debt is dangerous and that the dollar is destined to collapse because of all its debt, I don't disagree that debt is toxic. China is worse. They have bad debt. They have debt that'll never be repaid, and they have increasing debt far faster than any nation on earth. Their economy is built on debt. So whatever that means to the markets, long-term, eventually unsustainable, that's my view of China. Mate, the Central Bank of England normally confirm it. Bogus Fiat says, yes, I believe very few understand fractional reserve banking. And I would agree. I would say more traders on COMEX understand exactly what COMEX is than people who have money in the bank. That is 100% true. That was my point. The people on COMEX aren't going to be like, oh, you mean there's not 1 ounce of gold for every contract I trade? They know that that's not the case. They wouldn't be trading there. They're trading there because they're large institutions. They want fiat profits. They don't want to stack gold and silver. They may have some who may figure, for whatever reason. Now, there's some people who do want to buy gold or silver, but they want to buy it in 6 months, and for whatever reason, that's what their plan is. They may buy contracts to a point where they're going to take delivery. COMEX is performing a service by allowing, by having that in place. All right. Many don't believe a Federal Reserve note is a debt instrument. Bogus Fiat, what's important? Instead of saving dollars, you should save coins, because coins are not debt instruments. Coins are issued by the Treasury. For those of you still listening, the dollar, in the form of a Federal Reserve note is not backed in the same way, whereas the coin is a fiat creation of the Treasury that's stamped on there. So it's not a Federal Reserve note. So like those dollar coins are dollar coins. They're not Federal Reserve notes. Yeah, but the Chinese, Carl Joseph DeMarco, that's nonsense. The Chinese will stand for delivery, break the COMEX, and the world will be okay again. That's just complete and utter BS. You can legally demand and get delivery unless you declare force majeure. Okay. You can legally declare that. You can also be asked, would you take cash? And again, if you decide that no, I have to have it, and such trade would, quote, collapse the COMEX, that's when they'll tell you, sorry, in our broad discretion, you ain't getting it. So go away unless you take the cash. You're not going to be able to stand on your legal rights when they can tell you that the rights of the platform are more important than your rights. You can sue, you'll be out of your money. You're going to lose money. They'll kick you off the platform. You got 60 days to get back on. By then, you've lost your position. You've made your point, maybe? No. All right. Carl Joseph DeMarco, if the U.S. wants to spend $100, has to borrow it and pay back, say, 110. So they borrow 100. Yeah, it's just a whole cycle of debt. But that's what's happening around the world. It's not just the United States. It's the European Union. It's the Bank of England. It's the Bank of Japan. It's everywhere in the world. I heard Mike Maloney say this time is really different. Yeah, it's always different. He also told me I was wrong when I called the gold back yuan game changer unsourced and fake. He actually did a blog post. He did a video called Gold's Game Changer. And he spent like the first 2 minutes explaining why the gold-backed whatever was a game changer. And then he says, oh, but there's a lot of people like this one in the comments. And he points to Smaulgld that say it's not true and it's unsourced. I'll give you sources. And he cites Nikkei Asian Review. Game changer. Since that game-changing article, the yuan has gotten crushed, and so is gold. Nothing was a game changer. Fed Reserve has no reserves, pays a dividend to shareholders. Yep. The Federal Reserve isn't federal, it's private. A lot of people don't know that. The reset will look like the Great Depression. Assume there is a reset. They will reboot it again, continue stealing the wealth of the slaves. Money for nothing. If they're not going to take material, no matter what it is, they should not be able to trade on the platform. The platform is a scam. Well, if you heard what I said, I think the platform is a scam, but not for the fractional reserve reason, because it's just a trading platform, but for what they allow on the platform. The naked shorts, I think, are the scam. And the fact that it actually sets the price, that's the scam to me. Game over, yeah. All right, Roaring Fork got his mug today. I guess life has been lived to the fullest. Well, congratulations on joining the mug club. I sent out some mugs this morning. Why should a person trade oil if they have no intention of taking it? Okay, you need to know something about contracts, futures, and why they have them. The reason people trade that is to hedge their financial positions. So it's not a simple thing where, like, why would I go out and trade oil if I'm not going to put it in my car? They have entire financial systems in these corporations where they have to manage their money. They know they're going to need oil 3 months from now, 6 months from now, 9 months from now. They know what all their different requirements are. They know what their other financial requirements are. You'd have to, people are thinking about this, again, as if these platforms exist for the individual managing their own finances. That's not what they're there for. Again, it's the same example as it's not like they're bullion dealers or oil dealers. They're hedging platforms. They're trading platforms. They're not there for mom and pop to go and buy gold and silver. Traders trade for fiat profits, as Bogus Fiat says. That's right. Everything is fake except precious metals. Now, that's a point. I'm not disagreeing with any of that. All this stuff that they're doing, but 99% of the wealth in the world is all digital BS, going back and forth, derivatives and swaps, debt securities. Hardly any of it's of any tangible value. But when people say that that's an illusion, and it is an illusion, but you can buy real stuff with that illusion, that's why I don't dismiss it. The richest people in the world are not the people with the most gold and silver. I'll repeat that. The richest people in the world are not the people with the most gold and silver. In fact, some of the poorest people I know have silver. All right, precious metal is money. Yeah, but that is a minority position. you may say it's a fact, but the world doesn't agree. You know, there's certain things I think are factually correct. I like things more than others, but like for example, I like the SanDisk Mini MP3 player. I think it's better, but everyone bought the Apple Shuffle, which I thought was useless. Oh, did I get cut off here? No. I know why traders do it. If they're not going to take it, they should not be able to trade it. It's a scam to control the market. I agree and I disagree. The scam part of it is that these traders actually create the market. That's what I don't like about it. That should not set the price. However, I don't mind people trading a derivative product where they're not going to take delivery. That doesn't bother me at all. That is just financialization of the world that's existed. That's just the way it is. That's like saying you shouldn't be allowed to bet on the game unless you're going to go to it. No. You can still bet on where prices are going to move without having to take delivery. The problem with it is, where I agree with you, the scam to control the market is they're not interested at all. They're not setting the price of silver based on... The COMEX should be people taking bets on what the market is doing. It shouldn't be the market. That's my problem with it. Don't buy that new Terminator coin. It's not worth it. You'll be sad if you do. I don't know what that one is. The new Hunt brothers. What is COMEX trading? COMEX is a trading platform. What are they trading? They're trading the prices of the gold and the silver, or whatever it is. Contracts attached to nothing makes them a fraud. No, it doesn't. It's not the same thing. A fraud is, again, when you try to buy gold from a bullion dealer and you send them your money and they tell you, thanks for your order. It'd be like if I were to sell you 10 mugs and I sent you one of them. That's fraud. You asked for 10 mugs, I collected $250 and I send you one. That's fraud. But COMEX is not selling you, doesn't ever say that they're selling you gold or silver. They're saying that you can buy contracts, and a condition on that contract is in the 1,000 ounce you can't take delivery, but on the 5,000 ounce you can take delivery. And as long as they deliver to you or somehow satisfy you, that's not a fraud. You trade, you make your fiat profit, or you take delivery. There's no fraud there. They don't have to have... Okay, why would I hold more hamburgers in the freezer than I'm going to sell on a particular day? I know eventually I'm going to sell 1,000, but I don't keep 1,000 hamburgers in the vault or in the freezer because I only sell 200 a day. It's not a fraud. Yes, I could get a large party to come in, and what would happen if 1,000 people came for hamburgers? I'd shut down. It's not a fraud. So the whole idea, the trading, I guess it's, you have to get over the psychological hoop of that there is a financial market out there. And there's nothing wrong with financial markets. There's something wrong with fraud. This isn't a fraud. Derivatives are contracts to forward or buy a product. Anything else is a scam. Well, I guess that's a personal opinion, but I don't think it's true. You could say it's like a horse track. People in the stands and betting window have no interest in going to the stables, right? And shoveling horse, they just want to bet on the races. You know, I didn't see your comment. I gave the thing about betting on the game. But the same thing, yeah. Joker, I don't understand with all the fiat crashing, the expansion of the money supply, why silver and gold isn't flying off the shelf and the debt. First of all, the debt clock is just a bunch of nonsense. Don't even look at that. 600 plus. I don't even know what that means. People cite the debt clock to me. Forget the debt clock. But your question is a good one. With the fiat crashing, why gold and silver aren't flying off the shelf? Well, first of all, the dollar isn't crashing. The Turkish lira is crashing. The Iranian rial is crashing. And gold and silver are flying off the shelves, or were flying off the shelves, and are valued very highly against those crashing fiat currencies. The problem with once a fiat currency has crashed, you can't buy gold and silver. Why? Because your fiat currency isn't worth jack. Now, to your question, with the expansion of the money supply, why aren't silver and gold flying off the shelves? Well, it looks like they're starting to a bit. But part of the reason is, the Joker, is I would say most people under 60 don't think of gold and silver as the solid, safe haven versus fiat currency. Gold has been removed from the financial system largely since 1971, although it's still part of it as a reserve asset. Silver's been out of the financial system since the mid-60s.